Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel and another penny stocks list that could make you a lot of money. Two of our best penny stock picks from the prior video are up 18 and 20% just in the last 2 weeks, and today I'm going even deeper into the smallest companies for the highest returns. In this video, I'll show you why penny stocks under $5 could be your best opportunity. Then I'll reveal 5 penny stocks to watch for 2021. We're talking investing in penny stocks today on Let's Talk Money. Nation, the IPO market was red hot last year, but regular investors didn't make a dime. Companies are waiting for so long to go public that all the profit has just been sucked out of the stock before shares are even traded. Case in point, Airbnb was founded in 2008, but waited until it was a $40 billion company to list shares last year. The venture capital investors and the angels made their money. Then the pre-IPO investors, the brokers, and the investment banking clients that got their shares at an IPO price of $70 each and doubled their money instantly when the shares opened at $140, they made money as well. But Main Street investors have gotten nothing since. Nation, the IPO market is broken. The only place you're going to make those kinds of triple digit, those 5 and 10 times your money investments anymore is in these penny stocks that we'll talk about. These small companies with room to run. Now, we've covered penny stocks to buy on the channel before, but today I want to highlight the smallest of the small, those micro-cap stocks. These are companies with market caps between $50 to $300 billion. Companies that would be multiples on your money even if they just get to $1 billion market cap. I'm going to jump right into that list, but there are 2 things that you absolutely have to remember about these types of penny stock investments. First is that you have to do your research here. Many of these penny stocks trade on what's called the pink sheets or the OTC market. They aren't required to report as much information as you get with these larger cap companies on the NASDAQ or the NYSE. So you need to dig into those financial statements and the investor presentations yourself. Also though, you really do need that venture capital approach to these investments. Put together a portfolio of 10 or 15 penny stock companies you really like and then plan on holding them for 3 to 5 years at least. The idea here is that you've got to expect maybe 20 or even 30% of these to be flops, to be just dead money at best or even lose money. Another 3 out of 10 will probably be decent returns, but nothing special. But then it's those few moonshot investments, the 2 or 3 out of 10 penny stocks that's going to hit 5 or 10 times your money in 5 years. Those are the ones that are going to give you that average portfolio return in the high 20 or 30% range annually. This is a chart of the actual returns to these kinds of early stage startup investments, and you see that over half, 51%, paid out less than the original investment. But then about 7% of those last 2 bars on the right, resulted in 10 to 30 times and more on your investment. Nation, I spent almost a decade as a venture capital analyst, and even with the research into these stocks, that's just how the numbers play out. The ones you really like can turn out to be flops, and the ones that drop 10 or 20% right after buying, those might be the ones that rebound for those huge returns in the future. You just don't know until you give them time to run. Our first pick here is the smallest, $58 million PLTXF Life, ticker VEGA on the Canadian exchange and PLTXF here in the US markets. Now, PLTX has developed a digital one-stop shop for the plant-based community and is opening retail locations to sell its products. More than 5,000 plant-based products are available through the website and soon on those retail locations. The company's meal delivery service is available in Canada and expanding to San Diego as well. And Nation, I'll admit, I was one of the last holdouts on that plant-based meat trend, but this could be one of the biggest themes over the next decade. Retail sales of plant-based products jumped as much as 240% during the lockdown, and 23% of consumers have now eaten a plant-based alternative. Another third of those that haven't tried those plant-based alternatives say they're open to it. That means 51% of the $950 billion global meat industry is susceptible to that market share loss to these plant-based meats. Now take that with the fact that even the largest plant-based meat company, Beyond Meat, is only an $8 billion market cap, and you've got some massive growth waiting for this industry. PLTX announced last month a purchase agreement with Hillcrest San Diego for the first US store and a purchase commitment of $25 million in products. Another acquisition of Bloombox UK marks the European expansion, but I think what really interested me about the company was the business model set up around a community network. Besides an active online forum, the company has a social media following on Facebook and a channel right here on YouTube. I see very few other companies building a community like that, and I think it's going to pay off big time over the long term. I'm going to leave a link to the investor presentation for PLTX in the description, as well as their YouTube channel, so check that out. Byrna Technologies, ticker BYRN, is a $218 million company making non-lethal protection and munitions like its flagship product that shoots a small .68 caliber ball of chemical irritants to neutralize a threat without the consequences of a conventional firearm. Nation, I don't know if it is or it just seems that way, but the last couple of years seems chaos is all around us, and the demand for self-protection is another of those universal trends I'm watching over the next decade. The less lethal market is expected to double from $5 billion a year to $10 billion by 2025, and Byrna is well positioned in that civilian and law enforcement market with its .68 caliber product. It's lower cost compared to tasers and bowler wrap and has a longer range than pepper spray. Revenue surged 16-fold last year to $16 million. The company has more than $4.6 million in balance sheet cash, and cash flow has just turned positive. Shares aren't cheap at 13 times on a price to sales basis, but with that kind of growth, this is one to put on your radar. If you haven't signed up for the daily bow tie yet, look for that link in the video description below. You'll get daily market updates, the most important news, stock market trends, and what to watch, all delivered straight to your inbox. This is something completely new, something I've been wanting to do for all you out there in the community for a while, and it's totally free. So look for that link down below to sign up. Resonant, ticker RESN, is a late-stage development company designing RF filters for non-mobile devices. And with all the talk around 5G mobile, it's easy to forget that the majority of devices are going to be in that non-mobile space. All those Internet of Things connected devices that will also need these filters. Resonant is on target with a strategic partnership of manufacturing and scheduled to complete its first production volume this year. Revenue jumped to $1.4 million last quarter, double the previous quarter, and a 14-fold increase from the same quarter of 2019. So at a price to sales ratio of 48 times, this is definitely not cheap. But the market for this is huge as that 5G starts ramping up in non-mobile devices. Next here, T2 Biosystems, ticker TTOO, is a medical diagnostics maker to detect bacterial and fungal infections in the blood. The company already has 2 products with FDA clearance that can reduce diagnostics times from days down to less than 5 hours, and another product in process of that FDA clearance. Revenue grew to $5.2 million in the most recent quarter, 3 times the year prior sales, and double the revenue from the quarter before. The company has just over $61 million in balance sheet cash, and at a burn rate of $11 million per quarter, that's plenty of runway for sales to keep on growing. At $13.4 million in sales over the last 4 quarters, this one is trading at 13.8 times on that price to sales basis. Fortress Biotech, ticker FBIO, is one we highlighted last month at $3.20 a share, and I still like this one even after that wild ride up to $3.60, then down to $3 a share. The company is a biotech with most of its established products in dermatology, but a strong pipeline in products across oncology, gene therapies, and rare diseases as well. Fortress already has 5 commercial products, which is rare for a small biotech firm, but these are driving $43 million in annual sales while the company develops the rest of that pipeline. Revenue increased 17% over the last year, and its dermatology segment, the largest producer, it's growing at a 29% pace over 2019. The company has 2 candidates in phase 3 trials with a potential revenue of $790 million in tramadol alone. Some other standouts here, a $175 million market for its CUTX candidate for Menkes disease, and 2 others with sales potential in the hundreds of millions. The pipeline is there, and the company has over $218 million in balance sheet cash. That's against just $55 million in debt, so plenty of cash survivability here for that development. Click on the video to the right for the top 5 penny stocks I'm watching for 2021 for triple-digit returns. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.